Wait, stop scrolling. What if I told you that right now while you're watching this video? There's a cryptocurrency that has risen 140% over the past 90 days. Not a meme coin, not a Telegram pump and dump scheme. This is a layer, one blockchain platform built around artificial intelligence, and it's in the top 100 cryptocurrencies by market capitalization. Now, here's the real question. You need to ask yourself, is this the next big breakthrough or just another beautifully packaged trap? Because I've seen this movie before, and I know how it ends. Both ways. Today, we're going to break it all down. We'll look at the hype, the fundamentals, the warning signs, the real opportunities, and I'll give you a framework, a real framework, to decide whether a coin like this belongs in your investment portfolio. Grab a coffee. Let's go. First, let's talk about why this is happening at all. We're living through what may be the most significant technological shift in human history. Artificial intelligence is no longer just a trend. It's infrastructure. It's the new electricity. And the market understands that. NVIDIA became a $2 trillion company because of AI demand. Microsoft, Google, Amazon. They're all fighting to control the AI layer of the internet. But here's what crypto enthusiasts realized. Centralized corporations will own all of that AI. The data, the compute, the models, the profits. And more developers, investors, and creators are starting to believe that blockchain technology offers an alternative. Imagine a world where AI models are trained on decentralized data networks, where compute power is supplied by anyone with a GPU, where payments between AI agents happen without banks or intermediaries, where AI decisions are transparent and verifiable on-chain. That's the thesis. And in crypto, the thesis is everything. When you combine the two hottest words in technology, AI and crypto, you get an almost irresistible investment narrative. That's why coins in this sector are skyrocketing. But we need to slow down, because a compelling story does not mean every project in the space is real. Not even close. So let's talk mechanics. When a coin rises 140% in 90 days, one of several things is happening, or some combination of them. First possibility, real adoption and product growth. This is the ideal scenario. The project ships real features. Developers build on top of it. Users start using it. Transaction volume increases. Revenue grows. The market reprices the token to reflect actual value creation. This happens. It's rare, but it absolutely happens. Second possibility, pure narrative momentum. The project doesn't have to do anything. It just has to exist in the right category at the right time. When AI crypto becomes the hottest narrative in the market, capital flows into every project whose white paper contains the word AI, including, and I want you to really hear this, projects that haven't shipped anything new in 6 months. A rising tide lifts all boats, even the ones with holes in the bottom. Third possibility, coordinated buying and influencer promotion. Now we're entering darker territory. Some price spikes aren't organic at all. They're the result of coordinated campaigns. The project pays influencers, sometimes very large influencers, to create videos, posts, and content about how this coin is about to explode. Meanwhile, early investors and insiders quietly accumulate large positions at lower prices. Retail investors rush in. The price rises. Then early holders sell into the liquidity that retail just provided. That's called a pump and dump. It's illegal in traditional finance. In crypto, it remains a gray area in many jurisdictions. Fourth possibility, a major exchange listing. Fourth possibility, a major exchange listing. When a coin gets listed on Binance, Coinbase, or Kraken, it instantly becomes accessible to millions of new buyers. Prices can jump 50%, 100%, even 200% on listing day alone. If that 140% run happened around a major exchange listing, that explains a lot. Fifth possibility, macro conditions. When Bitcoin goes up, everything else usually goes up too. In a broad bull market, Even mediocre projects can show dramatic price appreciation. That creates a dangerous illusion of validation. People see price rising and assume the project must be excellent, when in reality, everything is rising. So the question becomes, when you see a 140% increase, what's actually driving it? Because the answer to that question determines your risk level entirely. Now, here's the part I really want you to focus on. Forget the price for a moment. Forget the 140%. Let me give you a real evaluation framework for determining whether an AI Layer 1 blockchain is legitimate, or just a well-disguised ghost. Checkpoint 1. What problem does it actually solve? This sounds obvious, but most people skip it completely. Read the white paper, or at least the executive summary. Ask yourself, what specific problem does this blockchain solve that cannot already be solved by Ethereum, Solana, or Polkadot? If the answer sounds like, we combine AI and blockchain for the future of decentralized intelligence, and it never gets more specific, that's a red flag. Real projects have technical answers. For example, we solve the Oracle problem for AI inference on-chain. Or, we provide a GPU compute marketplace with cryptographic proof of completion. Vague vision statements are marketing. Specific technical solutions are signals of a real team. Checkpoint 2. Is there a working product? Not a demo. Not a testnet that's been testing for 3 years. A mainnet with real transactions, real users, and real developers building on it. Go to the Blockchain Explorer. Look at daily active addresses. Look at transaction volume. Look at deployed smart contracts. These are verifiable, on-chain metrics that can't be faked. If all the project can show you is a beautiful website and an ambitious roadmap, be very careful. Checkpoint 3. Who is actually building this? Team matters enormously in early-stage crypto. Are the founders doxed? Meaning, are their real identities public? Do they have a verified background in AI, distributed systems, or cryptography? Have they shipped products before? Check LinkedIn. Check GitHub. Look at the code repository. Is it actively maintained? Are commits happening regularly? Does the codebase have meaningful stars and forks from independent developers? An anonymous team is not automatically a scam. Bitcoin was created anonymously. But an anonymous team with no track record and minimal GitHub activity is a major red flag. Checkpoint 4. Tokenomics. This is where many retail investors get crushed without understanding why. Look at token distribution. What about venture capital investors? When do those tokens unlock? Here's the scenario to avoid at all costs. The project raises VC money and allocates 20% of tokens to the team. Those tokens are locked for 1 year. The project launches. The price explodes. Retail buys the top. Then, 12 months after launch, billions of dollars worth of tokens unlock, and early investors sell into the market. Price collapses, retail is left holding the bag, while insiders cash out. This isn't hypothetical. It has happened dozens of times in crypto history. Checkpoint 4. Tokenomics. This is where many retail investors get crushed without understanding why. Checkpoint 5. Revenue model. Does the blockchain generate fees? If so, do those fees flow to token holders or somewhere else? A token that benefits from network economic activity is fundamentally different from a token that is just a speculative chip with no internal claim on cash flow. Real yield, protocols generating real revenue and distributing it to stakers, is something to actively look for. Checkpoint 6. Competition. The AI crypto space is extremely crowded. Projects like BitTensor, Fetch.ai, Render Network, Akash Network, Ocean Protocol. They're all competing for developer attention and investment capital. What makes this project different? Why would a developer build here instead of somewhere else? If you can't answer that convincingly, and the project's documentation can't either, the moat may not exist. Now let me make the bullish case, because it's real and it's powerful. We're moving toward a world where AI agents operate autonomously, booking flights, managing portfolios, writing and deploying code, running entire business functions. For AI agents to operate across platforms and services, They need to pay, receive payments, and interact with data in real time without human approval for every transaction. Traditional banking infrastructure simply can't handle that. You can't use a credit card for machine-to-machine micropayments at the speed and scale AI requires. Blockchain, specifically crypto, may be the only payment and coordination layer that truly works for AI agents at scale. If you believe AI agents will become a massive part of the future economy, and there's strong evidence they will, then you must also believe the financial infrastructure for those agents has to be built somewhere. Whoever builds that infrastructure and owns its native token could see returns that make a 140% move look insignificant. That's not fantasy. Bit&Sur has already created functional marketplaces for machine learning outputs. Render Network processes real GPU workloads for AI applications. Proof of concept exists. The question is whether this specific project is building real infrastructure or just riding the wave. Now, the other side, and I want to be brutally honest. First major risk, regulation. Governments worldwide are tightening crypto regulation. The US SEC has pursued multiple crypto projects claiming their tokens are unregistered securities. The EU's MiCA framework imposes new compliance requirements. An AI crypto project that issued tokens without proper registration could face enforcement action. Even if it wins in court, enforcement usually tanks the token price in the short term. Second risk, the collapse of the AI hype cycle. We've seen tech hype cycles before. The dot-com bubble, VR/AR hype, the metaverse boom. Every real technological shift brings a wave of projects claiming to be central to it, and most fail, even if the core technology succeeds. The internet transformed civilization, but most dot-com companies went bankrupt. Third risk, token unlock events. If a large portion of supply is still locked and scheduled to unlock in the next 6-18 months, that must be evaluated carefully. A 140% gain can be erased by a single unlock event if insiders sell into thin liquidity. Fourth risk, competition from traditional tech giants. What if NVIDIA, Amazon, or Google simply build superior AI infrastructure using traditional payment systems? Crypto's advantages, decentralization, censorship resistance, permissionless access, are valuable but not infinite. For many practical AI applications, developers may prioritize performance and simplicity over decentralization. Fifth risk, market correlation. Even if everything about the project is excellent, it can still drop 60% if Bitcoin crashes. In bear markets, crypto correlations approach 1. Everything falls together. Due diligence protects you from bad projects. It does not protect you from systemic market downturns. So, how do you make the investment decision? Step 1. Honestly apply the checklist. If the project fails 3 or more checkpoints, the answer is probably no, regardless of how exciting the chart looks. Step 2. Define your true risk tolerance. What percentage of this position can go to 0 without impacting your life? Because in crypto, that is always a real possibility. For a high-risk, high-reward speculative asset, a reasonable position size in a diversified portfolio is typically 1% to 5% of total investable assets. Not 20%, not your savings account. Step 3. Understand your entry context. A coin up 140% is not the same investment it was 90 days ago. Risk-reward has changed dramatically. Chasing green candles usually means you're buying from people who accumulated much lower and are now distributing into hype. Step 4. Define your exit strategy before entering. This separates experienced investors from those who repeatedly fail. Before buying, decide, at what price will I take profit? At what price will I cut losses? Write it down. Because when price rises and social media screams 500%, emotions will overpower logic unless you have a written plan. Step 5. Actively ignore influencers. The YouTube and Twitter crypto ecosystem is heavily incentivized to generate excitement around specific coins at specific times. Some receive direct payments or free tokens for promotion. When someone with a large following says a coin is about to 10x, Ask, what do they know that the entire market doesn't? And what is their financial relationship with the project? Healthy skepticism will save you far more money in crypto than any chart pattern ever will. So, is this AI crypto up 140% a scam or a real opportunity? The honest answer, it depends. It depends on whether there's a real product and real team. It depends on tokenomics and insider unlock schedules. It depends on whether you're buying because you did the work or because you saw a green candle and felt FOMO. FOMO has destroyed more crypto portfolios than any bear market. It makes people buy high, panic, makes them sell low, and the cycle repeats. The AI blockchain story is real. Decentralized AI infrastructure is a legitimate technological problem worth solving. Some projects will solve it and create enormous value. But for every one that becomes the Ethereum of AI, 20 will quietly disappear after their moment in the spotlight. Do the work. Ask hard questions. Invest with conviction built on research, not excitement built on price charts. And if you choose to invest, only invest what you can truly afford to lose. In this space, patience and preparation are rewarded. Don't let green charts make your decisions for you. That's it for today. If you find this kind of detailed, honest, no hype analysis helpful, subscribe to the channel. Leave a comment. Have you been researching any AI crypto projects recently? And what did you find? I read every comment and genuinely want to know what you're seeing. Share this with someone who's thinking about jumping into the AI crypto hype. It might save them from a bad decision, or help them make a good one with open eyes. See you in the next video. Stay smart, stay patient, peace.